I'll start with just saying thank you. Thank you everybody from BOB and all of you guys who are here. Really excited to give this presentation today. DIA, as was mentioned, is a cross-chain oracle. We are really interested in the whole Bitcoin renaissance and the movement towards building on Bitcoin. And I'm on the business development team at DIA. So from my perspective, I think some of the value add maybe I can share today is the business perspective of why we're interested in building on Bitcoin. Not just from a DIA perspective, but why I think and why we think this is interesting for dApps, infrastructure, and basically all types of applications to be building on Bitcoin. And then also, we'll get into a little bit of the product side and how DIA is uniquely positioned to support the innovation and help what's going on these exciting Bitcoin L2s. So we'll dive right in. And first things first, as I mentioned, I think we'll kick off with a business perspective on Bitcoin L2s. And throughout this presentation, I'm going to mainly be referencing EVM-compatible Bitcoin L2s. We are at BOB Hackerhouse, and in my opinion, from the infra perspective, I think this is really where the beauty aligns in terms of opportunity when we talk about, and I'll get into this here, when we talk about starting with liquidity and community, right? When we talk about Bitcoin, and then I'll reference it as like the EVM community or EVM compatible chain community, right? Really, we see Bitcoin is the most liquid, the highest value, and arguably the largest community asset and blockchain in the crypto space. And second to that, and of course, a lot of these points, and by the way, any feedback, any comments or questions throughout this, if you guys disagree with anything I say or think it's an argument and I say it as a fact, let me know. So second to that, second to Bitcoin's liquidity and community, we have what I would argue as like the EVM community and liquidity. And so for the first time ever, and what's really exciting about this from a business perspective, we see the opportunity to combine and really, I guess, collaborate and utilize both of these communities, both of these user bases. And I really think this is a strong opportunity. For the first time ever, we're able to access the liquidity and community that lies within both of these ecosystems, which has, kind of forever been mutually kind of non-collective and mutually exhaustive, or I'm blanking on the word here, but not collaborative. And so that's the first thing from a business perspective. The next thing is asset coverage. This is really exciting for us. I mean, from an Oracle perspective, asset coverage is really one of our greatest areas of focus. And Bitcoin at layer 2s create this entirely new opportunity and again, EVM compatible Bitcoin L2s, create this entirely new opportunity to support both BRC20 tokens and ERC20 tokens. So again, we're seeing that there is this massive sort of movement of interest and demand growing for BRC20 tokens. And on the ERC20 side, I think we're all sort of in consensus of the prominence that token standard has across the landscape. And so again, it's really interesting from a business perspective to be able to utilize both of these assets in a given context and in one ecosystem. And again, this is more of a novel opportunity that we see as an opportunity. What this leads into then is DeFi integration. Now, for the first time, we are experiencing and excited about the opportunity to use both of these types of assets within one type of dApp architecture, for example. And again, we can talk about how there's so much liquidity on the Bitcoin side, on the BRC side, and on the ERC side. And now with EVM compatible Bitcoin L2s, we see it as a massive opportunity to sort of, utilize both of these token standards, the demand and liquidity for these types of assets within given dApps, architectures, and chains. And we think this is going to really drive immense innovation. And at DIA, this is where our passion lies, is in fueling and supporting the innovation that's happening across exciting ecosystems. The last point here from the business perspective slide is about hyper-Bitcoinization cycle. This is more of maybe a personal note that I added here. I mean, this is a personal belief of mine. Would love to know your guys' thoughts on this. I think that we're really in this, again, like hyper-Bitcoinization driven cycle. Meaning, of course, we know that the cryptocurrency market is cyclical, and now more than ever we have regulatory clarity about Bitcoin, which is increasing the demand, the interest, the understanding, and the excitement surrounding Bitcoin. And so the adoption, the ability to now build applications on that ultimately settle back down onto Bitcoin is just really exciting. I think there couldn't be a better time for this great like growth of these Bitcoin L2s corresponding with where we're at right now with Bitcoin adoption and interest from a builders and retail and regulatory perspective. So that's the business perspective. And next we can dive into a little bit more about the infra perspective. DIA is of course an infrastructure provider as a cross-chain oracle. And this more so references the EVM side of BTC L2s and those which are EVM compatible. And so we of course know that the access to EVM tooling creates an entirely new. It basically lowers the floodgates. It lowers the barriers of entry for dApps and also infrastructure providers. The majority of infrastructure providers across the space are like their bread and butter is EVM environments. At DIA, we were born, on Ethereum, and we're currently on roughly 45 different L1s and L2s. The majority of those are, I think, maybe 35 EVM compatible chains. And so again, like we're combining this with the business perspective, this amazing opportunity to grab this liquidity from both of these exciting ecosystems. And then when you think about that business incentive for dApps, infra providers, and just overall teams to build on Bitcoin, and then you combine it with the ease of access to now deploy that we see corresponding with like EVM toolkits and whatnot, I really think it draws this like really exciting picture for teams to be interested in. And this is really why we are very passionate about this space and see this as an immense opportunity for DIA. And then the last point here is security. And I'll reference Alexi's points here, founder of BOB, who talks about the differences in ZK L2s and optimistic L2s, and where we're at right now with sort of these like ZK optimistic L2s, and it's still very early in this Bitcoin L2 space, but under the ideal framework and eventually, ideally, these rollups will be able to inherit the underlying security of Bitcoin. And so, as an infrastructure provider, as a dApp, as any team is building, your greatest area of strength is only as strong as your greatest vulnerability, right? So or what I should say is like your security is only as strong as your area of greatest vulnerability. And so, if your area of vulnerability is the underlying chain, there's definitely some issues there that need to be kind of revisited and discussed. So I think that just the underlying security and decentralization that Bitcoin offers as this like base layer, this ultimate finality and settlement layer for Bitcoin L2s is again just really enticing and adds to the general picture as to why we're excited about this. So now that kind of laid the framework on obviously why we're passionate about this, love to get into a little bit of a product dive for you guys and share more about what DIA is and how we view ourselves to be uniquely positioned to support this exciting movement. So DIA is, as we referenced, a cross-chain oracle. This is a slide where I'm gonna get into the architecture of DIA, starting at sourcing and then ending to the distribution and access. But from a high level, really what we strive to do is provide a product suite that can fulfill the oracle needs of pretty much any Web3 dApp. And what I mean by that is some oracles focus on just token price feeds, some do just randomness, some do just NFTs. At DIA, as you can see here on the access slide, we focus on tokens, randomness, NFTs, and more recently we've done a really deep dive into building out our support for LSTs, liquid stake tokens, and real world assets. And so I'm gonna get into a little bit more about the tokens here, the token architecture. And if you guys have any questions, definitely feel free to interject here. So starting perhaps with a comparison to other traditional oracles, right? Many are familiar with the traditional oracle architecture that is used by most oracles in the space. What I'm referring to here is the process whereby they source data from off-chain third-party data providers. So these are centralized entities which exist off-chain, which submit data feeds to, let's say, the oracle's nodes. The oracle nodes, aggregate, reach consensus, and deliver this information on-chain. Very high-level look on, simplistic outlook on what's happening here. We've seen that this is and can be robust and well decentralized in the right context. with the right infrastructure and support. But the particular caveat that we see within this architecture is the lack of transparency that developers and end users have regarding where the data originates on the source level. And what I mean by this is they actually can't trace the source of this data. They don't know, oh, this price feed is coming from Binance, Kraken, Uniswap, SushiSwap. Because these off-chain third-party data providers are aggregating this data off-chain, by the time it's delivered on-chain, there's a lack of transparency. And so that's one caveat that we identified, and that's actually the reason that DIA was created, was to become a solution to this lack of transparency. And the way that we do this, really, simply put, is on the sourcing side. We source our data from first-party data sources. And really what that means is looking at distinctly DEXs and centralized exchanges as the first-party source for data. So this is the architectural high level. On the product side, and then I'll get into, once again, bring this back to why this is relevant for Bitcoin L2s, of course. On the product side, there's three things I usually like to highlight of how this actually differentiates our product. The first I already referenced a bunch is this transparency. So you have end-to-end understanding where data comes from and actually can view that through the entire value stack. And what's interesting about this is you can actually customize your data sources. And we'll get into this as well with building on Bitcoin context. But within customizing data sources, this is interesting, right? We're now in this blockchain environment where we have a lot of cross-chain applications. We have cross-chain lending, borrowing, cross-chain CDPs, stablecoins, right? Anything basically where the collateral exists on a given chain, it can be very relevant to select certain sources because we're scraping, again, DEXs and centralized exchanges, but in this context, DEXs on a given chain. So what we can actually do is take a very granular look at the pricing of a given asset on one chain. Oh, what is the value of bridged Ethereum on BOB, trading natively on BOB? That's the value of one's collateral as it exists on BOB. So again, taking it high level, the first point is transparency and selection of sources, and that's one example why teams that work with us like to select sources. Getting into a little bit more of the details here, the next thing is, these data feeds that we're taking in are very granular. We're taking in trades at the individual tick level from these sources, and this allows us to implement a lot of customization for teams that are using DIA oracles. We see that different dApps have different dApp architectures that require different oracles, different oracle parameters, and we provide this very tailored approach to supporting different dApps. Again, what this looks like, an example is, you have a high frequency perp trading protocol. You're gonna need updates every tick, right? You're gonna need updates every time you're entering and exiting a position. Very high frequency Oracle updates. This is one area of customization that might be used by DIA or implemented by DIA. In another example, say you're working with a lending borrowing protocol, you might benefit from actually expanding the window, expanding the time in between updates less frequently. Why? Because lending borrowing protocols often work with less liquid assets. They work with, of course, highly liquid, but oftentimes they do use these long tail and ecosystem specific assets. And so by actually expanding the trade window, you can collect more trades in between each update and create a more robust price oracle for that context. And so the second point that I'm getting at here is just this customization. Again, on the product side, when working with DIA, you can customize, I mentioned the sources, you can customize the update parameters, so how the oracle is updating, whether it's time basis or deviation basis. That's based on push-based oracles. We're actually implementing pull-based oracles as well. And again, if anybody has questions on what these terms reference, just let me know. Pull-based means basically, oh, I need an update when I say I need an update. I'm entering a position, I'm gonna trigger my buy order that then triggers the update. Whereas push-based oracles update upon predefined thresholds. So, oh, every 2 minutes I need an update, or every time the asset changes X percentage in price, an update is triggered. And so we're actually implementing, right now we're push-based, we're implementing pull-based as well, which will be optimized for other types of use cases. Okay, so those are the first 2 points. The last point here, and I'll take a pause because this is the point I want to anchor in here. This is the point that excites us about building on Bitcoin and where we're positioned. So far, I just got into the DIA product and generally high level how we apply for types of dApps across ecosystems. When we talk about building on Bitcoin, as I referenced, we are sourcing trade data from DEXs across different ecosystems. I mentioned centralized exchanges, but also DEXs. Why this is exciting, actually, centralized exchanges is very relevant here as well. Why this is exciting is because we're now seeing BRC20 tokens trading on centralized exchanges. We're also seeing them, of course, on Unisat, OKX Wallet, and other like wallet/DEXs, and of course, probably missing a few relevant ones here, that we can also source these and scrape these on-chain transactions to use for DIA data feeds. So DIA is positioned because of this first-party data sourcing approach to support BRC20 assets. This is what's exciting about this. We are able to now, work with chains that are building on Bitcoin, these L2s, and provide not just ERC, the typical ERCs, but the BRCs as well. As these ecosystems become more vibrant, more DEXs are launched on them, we're going to be able to integrate, scrape those DEXs, and support the vibrant DeFi ecosystems that are being built on these exciting L2s. And so that's really, I think, this area of alignment where we see ourselves being able to support the innovation that is happening on Bitcoin L2s. That's the product background. Again, here just a bit of a reference, a visual reference here to the DIA app, which is basically demonstrates all of the APIs. APIs are basically the off-chain version of data feeds that we provide that can be integrated on-chain based on request. And so again, we're just demonstrating here that we're already out of the gate supporting Bitcoin BRC20 assets. Already in sats, of course, being currently the most liquid and high volume and demanded assets right now in the ordinal BRC20 space. As you can see here, we're demonstrating the sources. And by the way, this is a live screenshot taken from the DIA app. These are the sources that we're supporting for this asset. You can see the volume here. You can see in the background we're supporting sats. And more of these assets, as they become more liquid, as they get more centralized exchange support and DEX support, or rather seed more liquidity across DEXs, we will be able to support more of them. And so we're really excited about this opportunity. And so that's that on the token side. Again, I referenced, just to give a little bit, this is a product deep dive, so it would be remiss not to mention the other areas we're focusing on. Market price feeds, of course. NFT floor price feeds we placed a great emphasis on. But more recently, actually a lot of these developments that we make kind of lead into being an opportunity for transitioning into future development. So for example, when we look at LST fair value feeds, those are actually very synergistic with our approach for real world assets. And so what I'm mentioning here is, let's start with the real world assets example. I think that's more interesting for building on Bitcoin. Ultimately, hopefully tons of this real world asset value will be able to be settled on Bitcoin. I think it's a great argument that that these assets are eventually traded and settled on the most secure decentralized chain. And so with regard to real world assets, of course, you have assets that have net asset values off chain. You can receive that data from trusted sources. This data is being, these assets are being deployed on-chain, so you can actually compare the net asset value off-chain to what it's being priced at on-chain. Why is this? Well, because these assets will be traded initially on DEXs, and again, we're the oracle that is supporting DEXs as the first-party source of trades. So we can basically do a market-based price feed for real-world assets and LSTs based on how they're trading across exchanges. But we can also compare that to the net asset value of these assets off-chain. And that gets interesting because now we can actually provide this sort of proof of collateral health. We can compare the net asset value off-chain and basically look at, to what extent is this actually backing, to what extent is this collateralizing the value for which these assets are being traded on-chain. And it's the same thing with LSTs. We can look at, okay, there's a LST protocol, liquid staking protocol. You deposit a token, you receive a receipt token. This token is usually traded on DEXs, so it has a market price. You can look at that. But in many cases, these LSTs and these RWAs are still fairly illiquid. And so market-based price feeds aren't always the best, basically most resistant form of pricing these assets. When it comes to oracles, and this is a little bit of a tangent, but just to kind of share more information on what's going on behind the scenes. Really, arguably, the most important thing is looking at the underlying liquidity of these assets. With thin liquidity, these assets can be easily manipulated on the exchanges that they're trading on. And so when you're looking or working with assets like LSTs or RWAs, which are still nascent and have pretty thin liquidity, you can, we believe that one of the, and as it's been sort of, demanded, one of the approaches we can offer here is, once again, combining the net asset value or the deposit token in the liquid staking context to what is it being traded at on the market. And we can provide what we call fair value feeds, basically proof of collateral health feeds that demonstrate the collateralization ratio of these assets. So that's just a little bit more of the product slide here and what we're offering. Really excited. Again, this is referencing what we do at large, but again, these are exciting in Bitcoin contexts. We want to be able to deploy all of this verifiable randomness, not just token price feeds, but support all of these types of innovations on Bitcoin. When we combine this with ERC20 and BRC20, and once again, this entire business image I drew out here, I think it's a really great opportunity, and we're excited about all the really cool projects that are building in this space. Lastly, on the product shill slide here, we have the DIA Oracle Builder. This is kind of a product that we're building out now, soon to be launched. And what's exciting about this is it just creates DIA and furthers our transition into becoming completely permissionless. We believe that DIA was formulated as a DAO. I mean, really from the early stages, the vision of DIA was organic growth as an organization. And this is sort of once again, getting towards that goal, that image that we see DIA. DIA, our goal is to be as openly accessible and transparent as possible. And with Oracle Builder, we're gonna enable anybody to come in and with a few clicks of a button, no code required, instantaneously deploy their own custom oracles. And so right now in the Oracle space, what has to happen is you have to go to a team to request a custom oracle. There is no basically, it is not automated just yet in the deployment of oracles if you need a custom oracle. And so we've launched this on testnet, still in the testing phase, and pretty excited about this. I mean, this is, once again, if we continue to see this massive growth of development and builders on Bitcoin, we can deploy DIA Oracle Builder eventually, and all of these assets will be able to be supported. And when we see more scale here, more scale and demand, with Oracle Builder, we'll be able to scale accordingly to all of the requests and whatnot that we see, and support the really exciting, fast-paced moving ecosystems that we see ahead of us here. That's pretty much it on the product slide. So once again, I wanted to say thank you so much. This is something we've been diving into head first. Personally as well, just as a crypto user, I mean, this is something I'm really passionate about. I'm honored, to come and be able to talk about it in front of you guys today, especially, connect how DIA is positioning itself in this space. And so I just want to say thank you everybody so much for the time. And I'm sticking around all day if you have any questions or want to, explore how we might be able to collaborate. And thank you so much.